What's crack-a-lackin', everybody? Money smart guy Matt Zapala here, hailing to you from Dallas, Texas, and we have an emergency podcast for you. Bank failures, what to do about it. Listen, my co-host today is Jesse Moon, insurance industry entrepreneur, retired Army First Sergeant, my business partner right here in Dallas, Texas. What's going on, brother?
What's going on, Coach?
We have a lot of people contacting us about what's going on with the banks. And so, before we dive into your story, because there's a lot of things that you bring to the table that's about military transition, some of the misconceptions that a lot of military service members have when serving in the military as it relates to money. But before we dive into your story, I want to talk about what's going on here with the banks. What's some of the blowback you've been getting here? Because you're helping clients on a day-to-day basis, helping people with their personal finance. You're one of the most foremost experts people seeing out there on TikTok and in IG Reels on educating people about uninterrupted compounding interest accounts.
So what we're seeing right now, Coach, is we call it FUD, fear, uncertainty, doubts, and natural human instinct, we panic. And because we don't have that financial knowledge, that financial awareness to know what to do. So my inbox is blowing up. Do we take all of our money out of the bank? Like what do we do is what they're asking. Yeah. So it's constantly messaging people, stay calm. Right now, just stay calm. Because it's not like it's an average, ordinary mom and pop bank that Signature was, or even Silvergate. So they dealt with more of the businesses, small businesses, community, instead of just people like you and I.
So let's take a look at this article. Jordan, can you put up this article here? So Silicon Valley Bank last week collapses in second biggest U.S. bank failure ever. Largest bank collapse in 15 years since global financial crisis. A couple things to keep in mind here. Regulators took over California-based Silicon Valley Bank on Friday in the second biggest bank failure in history. Since 2008, it's the largest, biggest failure since Washington Mutual was absorbed by Chase.
Yes.
And then Silicon Valley Bank failed after depositors, mostly technology workers and venture capital bank companies, began withdrawing their money, creating a run on the bank. Now, this is where what you just said, mostly technology workers and venture capital backed companies. So back on us, Jordan. So when we're talking about like Chase and Bank of America and Wells Fargo, it's like you and I just, your common Joes having free checking account, right? They're putting direct deposits from the job. They might get a car loan. They might get a mortgage. They might get a credit card, whatever case may be. Talk to us about real quick, Jesse, what type of customers really Silicon Valley Bank had and why it's much different than your typical bank?
Well, 80% of their customers were companies. They were real estate brokerages. 20% of those were crypto. Those were the two major banks that were crypto friendly. And the CEO of Binance was saying that he highly speculates that they were doing it on purpose to make cryptocurrency fail. So, but that's just speculation.
Right.
So
speculation, a little bit of conspiracy there. Could it be true? Could it be true? Right. Let's take a look at this screen again one more time, Jordan. Silicon Valley Bank was not a small bank by any measure, the 16th largest bank in the U.S., and had approximately $209 billion in total assets and about $175.4 billion in total deposits as of 31 December 2022. Washington Mutual had assets of $307 billion when it was shuttered on 25 September 2008, 10 days after Lehman Brothers had failed. So it's unclear how many of the bank's deposits were above $250,000, insurance limit guaranteed by FDIC. But let's go to the next paragraph here. It says the bank was heavily exposed to the tech industry, and there's little chance of contagion in the banking sector as there was in the months leading up to the Great Recession more than a decade ago. Major banks have sufficient capital to avoid a similar situation. So there's a fancy word there, contagion. Contagion meaning that this financial meltdown can spill over into other banks, and it can cause a run in the banks with other guys. So now let's talk about, let's say I had $1 million, okay, in the bank. For the layman person that's listening to this, if you have $1 million in the bank and the bank shut down and you went to go make a withdrawal to get your money out, the bank says, I ain't got your money because we're shut down. The regulators shut it down. Can you explain everybody here what the FDIC means?
Well, FDIC is, we've been taught to go to school, get a job, and open up a bank. And we believe that the bank is safe because it is FDIC insured up to $250,000. So if you had $1 million in the bank, you'd get $250 back. The government would bail them out and give you the $250. Anything other than over the $250, you lose it. So that's why like we were discussing the other day, how many people actually have $250,000 just sitting in the Chase bank account, right? Just average Joes like yourself. So it's FDIC is for protection up to a certain point.
So let's take a look at. I want to show here in a second, Jordan. I had a document here I want to show you guys based on the companies. Where are you here? Bank failures. Okay, let's take a look here. All right, let's take a look at this. So these are the bank, and we put together a document here of bank failures. Okay, let me get rid of that. Get rid of that. Okay. So longest periods between U.S. bank failures since 1933. So here's the history of bank failures. Okay. Well, if I can zoom that up some more. Let me get it out. Is that better? Okay. So the source is FDIC. So you had bank failures in 1953. Then look at the gap there. And 10 years after that, look at the long gap between 1962 and 1996. But in the meantime, 458, 461 days respectively between bank failures. And then 1996 all the way to 2017, 531. And then 2007, right? So all these, the longest extent of bank failure was June 25, 2004 to February 2, 2007, 950 days since previous bank failure, 951 days since previous bank failure. So it's not like it's uncommon for banks to fail. I mean, if you're talking about the 80s savings and loans meltdown, that's another conversation to have it too as well. But here's a couple notes we took. Before this month, the last time a bank backed by FDIC failed was 2023, October 23, 2020, when Alameda State Bank closed. Generally, a failure occurs when a bank becomes insolvent, meaning it lacks the funds to cover all of its customers' deposits and the money it owes to others. Bank failures aren't uncommon. Before March 2023, only 3 banks, before March 2023, only 3 banks had failed since the coronavirus pandemic started. And all 3, the First State Bank, First City Bank of Florida, and Alameda State Bank, experienced previous financial problems, according to FDIC. Bank failures happen from time to time, which is why it's important to have your money at an FDIC bank. And as soon as a bank fails, FDIC estimates how much that bank failure will cost the deposit insurance fund, and quarterly assessments of FDIC insured banks fund most of the DIF according to FDIC. I want to show this too as well. List of the top 10 largest U.S. bank failures sorted by assets. Let me see if I can put this on one dealio. Let's go to the next screen here. Okay, here. Number 1, Washington Mutual. And then you got Silicon Valley Bank. And we talked about another bank they just failed here this week too as well, Signature Bank. So let's stop. Let's go back here real quick, Jordan. So the commonality between Signature Bank and Silicon Valley Bank is their clientele.
Correct.
They had you mentioned crypto, hedge funds, venture capitalists. So big boys.
Big boys, big players.
You talk about your whales. So you're not talking about you and I, 7 figures. Right. So can you talk to folks about that again in terms of highlighting? So if people out there thinking they got to panic, why shouldn't they panic? Or should they panic?
Unless they're a big boy.
Yeah.
Unless they're a big boy. So the thing is just the average day, ordinary middle-class American walking the street, right now, there's no need to panic at all. These are the big players that are in the market, real estate brokerages, hedge fund brokerages, crypto companies, crypto exchanges, because they're trading the tether as a store of value. But we have FDIC. If you don't have more than $250,000 in the bank, then you're protected right now. The thing is like you were mentioning before, this could potentially create a downward spiral. Yep. And I think what we need to pay attention to right now is the bond market. Yep. And what's going to come to play after the banks. This
is what created it. I mean, the reason why SVP Bank had failed is because they sold a tranche of bonds, and since they bought it years ago, it was less than the rate that's being issued by new bonds issued today. And so they had to sell those bonds at a discount, which was a loss. And so a lot of the bank depositors and these, larger institutional guys would understand what that means, or larger company guys would understand what that means. If, hey, we're watching our bank, hey, Joe, let's go get our money out. Maybe we don't tell our buddies, but the word's starting to get out.
That's it.
They became what they call a run on the bank, which means everybody started withdrawing their deposits.
Listen, tell your buddies, it says right here that there was 200,000 tweets on Thursday about getting your money out of the bank.
Right.
So back in the day with all the list of bank runs that you showed, they didn't have social media like we have today. So it just heightened it, and this is why it's the fastest bank run and there's ever been. So
let's take a look at this. If we can look here, Jordan, Arizona Senator Mark Kelly reportedly calls for censoring social media companies to prevent bank run. He denies it.
Right.
Senator asked about censoring social media during a meeting with the Federal Reserve, FDIC, Treasury Department senators, and House members on the bailout of Silicon Valley Bank. Right? And so it says here, they called to confirm. He was denying it. Jeff got a Zoom meeting with the Fed that if they don't censor the tweets, it could lead to the run on the banks. So, when there's a run on the banks, listen, banks need your deposits. Go back to the screen here. Banks need your deposits. Mm-hmm. That's why they offer us free checking account. People think, the bank's so cool. No, they're trying to get your money in there because based on their deposits is based on the cumulative overall bank deposit they have that day. They can go out and start lending money using your deposits as bank assets.
Correct.
So, a lot of people are misguided on, banks to just, no, they're not there to make you rich.
Correct.
Banks are there to make themselves rich. Yeah.
So, and that's what we hit on. This reminds me of pump and dumps in crypto, where we would all go to a like a group me chat, and we'd have 100,000 members in there and say, at 7:00 on this day, we're going to announce a coin, and everybody's going to buy the coin, and then the top people start selling off. Yeah. It's pump and dump.
Matter of fact, let's transition to that a little bit. So you were involved before I met you. You had some experience in crypto.
A little bit.
Now I believe I like crypto. I think listen, I carry a little bit of cash on me, but when's the last time you really need to carry cash? Sure. I just kind of carry cash on me because it's kind of like an old school type of habit.
You're a big baller.
And so sometimes with valets and tips for your barbers or whatever the case may be. Yep. And so, that's when I like to carry cash. But for the most part, I don't carry cash. I don't need to carry cash to pay the bills. I just, credit card and digital pay. But, I like the concept. The reason why crypto was really started was really in 07, 08, 09 when, the crypto space, like, why are we letting the central banks do all this craziness?
Correct.
We should have some form of decentralized currency so the government can't get involved. And that gave birth to the crypto market. For your limited experience in crypto, what was the talks there about you either being an investor in crypto, you educating people about crypto as a business? What's been your experience with that?
Well, everything comes to belief. So when I was first getting out of the military, and we'll talk about that here in a moment, I wanted to find a place that I could plant my flag and truly help people. And I saw cryptocurrency as an industry or as a niche where I could actually educate people on how money works and how money grows. When I first got into crypto, Bitcoin was $643 a coin, and
damn,
we were riding it up, but it was more of the education.
$640 a coin for Bitcoin.
$640. Yeah. So you could just imagine. So I put a severance package from the military into crypto at that time. But it was interesting. It was the FOMO at that time, not the FUD, but the FOMO, the fear of missing out.
Yeah.
So people were getting reverse mortgages because we were like, it's about to go to the moon. It's about to go to a 50,000, 100,000, and people were doing some crazy things. Even though we told them, hey, invest at your own risk. Don't put anything in that you're not willing to lose. People weren't listening because of fear of missing out. But getting into that industry, it was belief in not necessarily the coin, the Bitcoin or Ethereum. It was belief in blockchain technology. Like you said, it's everything. Even the debit card, that's digital.
Yeah.
So
Yeah, for sure.
Nobody's carrying cash. So it's digital currency has already been here, but the decentralization and the problem with crypto right now is it's decentralized. That's a good thing, but it's unregulated. That's a bad thing.
Wild,
It's
Wild
leaving
West.
too much room for scammers, and we're seeing these crypto exchanges disappear with the money. But Coach, when I first got started, it was more of a lending platform. So we were doing not IPOs but ICOs, initial coin offerings.
Got it.
So you get in at a coin, you buy $1,500, $2,000 worth of a coin at 6 cents, 20 cents. Next thing you know, once it launched, it's going up $4, $5, $6,
Yeah.
and then you sell.
Because everybody then gets a tweet or everybody gets a message. Everybody's putting their own money into it.
Correct.
Yeah.
So and it was it's like
Pumping
you
up the
would call
value
somebody,
of it.
did you get a chance to get in? Because it's like writing. It's like we were shutting down the system because of the bandwidth. We were crashing the servers, and a
many
lot of
people
people
wanted to buy.
didn't have a chance to buy.
Yeah.
But then what happened was, as cryptocurrency or Bitcoin, as it was going, we would loan out the coin. So let's say it was a certain coin. The coin's value was $4. Well, we would loan out that coin, and then the value of Bitcoin, as it would go up, that company could pay out those loans where we would lend it, and we would just convert it from that coin to Bitcoin. But what happened was Bitcoin went up to $19,800, and then it dropped back down to $3,000. So if you had $200,000 in loans lended out in that coin, they couldn't come through on the things. So guess what? They just disappeared overnight.
What would you say the underlying motivation for a lot of people getting involved in crypto? Because it's a completely different animal. You have the people that believe in real estate, you get your people who believe in insurance, you get your people who believe in stock market. What's the personality of somebody who gets involved in crypto?
Control. It's people are starting to wake up to realize that they have no control over their money. Stock market loses, their money's trapped inside of a financial plan. Where everybody's taught to put their money, and they have that gut feeling like my money's losing. Everything I worked hard for is disappearing, and there's nothing I can do. So they're starting to wake up, and they're looking for other alternatives that are safer. So, for example, banks, they're centralized. So there's somebody governing the bank, and it's not just, or it's just one person. But crypto is decentralized. So you and me can confirm a transaction in a matter of seconds. It's not shut down on Saturdays or Sundays. So it's, for example, let's say you got a coffee right here. Let's say I had a Bitcoin debit card hooked up to my exchange, but you had a Bank of America debit card. We go to the same coffee shop, you swipe your Bank of America debit card. Well, what happens? You ever see on your bank statement where it says pending for 3 days, right? Because it's got to go through the clearinghouse. They're going to take a piece of that pie, and then it's going to go to somebody. By the time it gets back to that coffee shop, money's already taken out of that transaction, and it takes 3 days for it to actually process. But if I swipe my Bitcoin card, guess what? Within a matter of seconds, the coffee shop's going to get all of its money. Within a matter of seconds, transactions
Without a middleman.
Without a middleman. You're cutting out the middleman.
So, I like that. I like that, but where would Visa go? Where would MasterCard go? Where would American Express go?
They're going to have to figure out a way to pivot and adjust.
Where would the banks go? So banking. I've always said banking is required, but banks are not. Let's take a look at this bailout recipient. Back in 2008, the government gave out something called the Troubled Asset Relief Program, what they call TARP money, where troubled companies, where taxpayer money, your money, had gone into the ongoing bailout of the financial system. This is when, remember that. The 1%, the protests, everybody's with the 1%. People get mad at billionaires and because people have been pissed off. Hey, you're bailing out the auto industry during the financial crisis. You're bailing out the bank industry. What about the common Joe who lost their job?
Right.
What about the common person that lost their house because it is a result of the decision because of some guys in some boardrooms in Wall Street or in D.C. or the Federal Reserve are making decisions that affect millions of lives, and they have no say-so in it, but they affect millions of retirement plans and pensions. And people are upset that their own taxpayer money got to bail out the financial system because the financial system could not fail. It was a $700 billion bill. By the way, how small does that sound now compared to the...
I remember in 2008 when they were trying to pass an $800 billion stimulus, and it got shut down. They said it was too much.
Too much?
Too much. And
Right.
I honestly believe that we're about to see a couple more $1 trillion be printed off.
Look at that, which continues to devalue our money, increase inflation.
Correct.
So there's 991 recipients. So these are the financial institutions or the businesses that needed TARP money, Troubled Asset Relief Program money. Over $635 billion in disbursements. Look at this. Only $390 billion returned. Only 390. So in other words, they got a loan from the government, from you and I, our taxpayer money through the government, but still ain't paid it back. Who didn't pay it back? General Motors ain't paid it back yet. 11 was it $1 billion loss? Because they wrote it off, net outstanding. Chrysler, we bailed out the General Motors, we bailed out Chrysler. They still haven't paid back $1.2 billion. Who else? Look at Wells Fargo, JP Morgan, Mortgage Assistant Corporation, Cal HFA, Citigroup, Bank of America subsidiaries, including Countrywide, 2.3, not paid off, not paid back yet to the American people. Interesting trend here. First Bank Corporation, which it's a bank. South Financial Group, a bank, $200 million not paid back. Sterling Financial Group, another bank, not paid back. UCBH Holdings Bank, not paid off. Loan from the American people. First Bank's another bank, not paid off. Homeward Residential, mortgage servicer, not paid off. MidFirst Bank, again, another mortgage servicer, Carrington Mortgage Services. U.S. Bank, National Association, mortgage servicer. Pacific Capital Bancorp, I can go on and on, right? All these financial companies have not paid back their loan from the American people in red.
Interesting.
Right? But everybody's talking about the insurance industry because AIG this, AIG, we can't let AIG, American International Group, that insurance corporation fail. But guess what they did, though? They paid back the American people with $5 billion of interest.
They paid it back, but what's very interesting here is, and I think we need to shine some light and clarity on it, it wasn't their life insurance portion of their business. It was that they over-leveraged themselves on the real estate side because they had a real estate portion. So it wasn't the life insurance.
Yep.
It was the real estate holding that went under.
Yep. And so when you're looking at the reputation, let's say I'm having problems with my finances. And the Jesse Moon Bank comes in and suggests me a Matsapala Troubled Asset Relief Program for me. And I borrow whatever it is. I borrow $10,000 from you. And then you and I are seeing each other at all the meetings. You and I are seeing each other at the gym. You and I are seeing each other at church. Right, and I ain't paid you back yet. What do you think the conversation's like?
It's going to be uncomfortable, right? It's going to be awkward, Fist bumping, high-fiving, knowing you owe me money.
Yeah, I mean, right? And I'm still coming to the parties. Right. I'm still coming to church. I'm still praying to God. Yeah, bro, you better pray to God. You pay me back.
That's it.
But that's what's going on right now with the Troubled Asset Relief Program, even from 2008. So right now, the question is, okay, what do we do? What's the most important thing for it? So number one, not to panic.
Stay calm.
Stay calm. The sky ain't falling. But at the same time, too, I think this might be a good idea if there's not any other life events that are constantly warning you and give you enough red flags to make sure you improve your financial literacy, you improve your financial education, you improve who you're having conversation with and what influencers and educators and mentors you have in your life about personal finance. You see before I jump into the forums of money here in a second, you see clients on a daily basis. You get a lot of people contact you on TikTok. A lot of people contact you on all the social media, Facebook Reels, IG Reels. What seems to be the commonality between a lot of people that over the year, what's some of the consistent common things that people are asking you more information about what you're doing?
They're wanting to know how to get more growth on their money than what's in the bank. And that's why we talk a lot about uninterrupted compound interest. And it's just really financial awareness and educating people how money works and how money grows. So I tell people before I take on any clients, I educate them, and then I want them to repeat back to me how it works because I need to know that they fully understand it and comprehend it instead of just moving money from one place to the other. But the common factor is from everybody is I want to protect my money, I want to grow my money, and I actually might want to retire someday. And I want to make sure there's some money inside of it. So
not have to work till I'm dead.
That's it.
So speaking of that, I always say if you want to be rich one day, you want to be wealthy one day, you got to follow the habits of rich people, of wealthy people, successful people. And so this is Jordan. Let's take a look at this. So this is a proxy statement from a publicly traded company called GE. Okay, I don't know if we can see this too much, but let me see if I can zoom in there. Okay, so these are the C-suite executives of this. This is GE. Okay, GE, General Electric. Okay, these are the CEOs. So let's take a look at what they put inside their retirement plans. Inside the retirement plan, they put $94.50 a year.
That's the match.
Yeah, that's the match. Okay, so they're getting paid $94.50, $94.50 all the way down. Okay. Of course, look at this. I could use the private jet, lease cars, financial and tax planning. These guys are using financial and tax planning money to help them with their personal finance. Look how much money they've invested. So you want to find out what rich people do? Find out where to put their money. They're asking $5,300 for financial and tax planning. I would assume reimbursements or credits to people in their corner. So imagine paying somebody $24,000 for financial and tax planning for your financial estate. Who's that? That is Bornstein.
Bornstein. That's one of their board members.
Comstock has $20,600 in financial and tax planning and $15,125. There's three others that don't pay anything. Maybe that may have their own hookup, whatever. But let's say Rice has $15,125 being paid for financial and tax planning. So therefore, they can be up to speed.
They're not using TurboTax.
They're just not using Google and YouTube,
right?
Or simply just listen to podcasts. They're actually investing in themselves.
What is it? H&R Block at Walmart,
right? But I thought this was pretty funny. $1 million in relocation benefits. $1 million in relocation. Okay, I get it. All right, but take a look at this though. Life insurance premiums: $136,456, $62,000, $227,000, $226,000, $107,000, $153,000, $172,000 going to life insurance premiums. But Jesse, that's why I don't buy life insurance, because it's so expensive. What's the misunderstanding when people see this type of number?
What's interesting, Coach, is if you look at this, that 94.50, that's the match, and they shape us, and they say put up to the match and at a minimum.
In terms of like your 401k.
Because it's free money.
Yeah.
However, if we look at it, it's really not free, because all that company is doing, because every dollar that company matches that person dollar for dollar, that employer is taking it as a tax deduction that tax year.
Yep.
So what they're doing is they're shifting the income tax liability away from them and onto you. You're going to have to pay taxes on the money 20 years from now. Now, do you feel taxes are going up or going down in the future? Then what they do, so that's a win for the company because it's tax deductible to the company every dollar. But here's the other cool thing. That those hundreds of thousands of dollars they're putting in life insurance, it's also tax-free to the company, and it's or tax deductible to the company and tax-free to the employee because of the type of life insurance it is. It's not your ordinary term life insurance.
It's not the stuff you get online.
It's not whole life insurance.
It's your permanent index universal life. Yeah.
It's universal life insurance called an executive bonus plan.
So when people are looking at this, it's not, I'm trying to get the least amount of premium for the most amount of death benefit. No, this is a financial and tax strategy legally in the tax code that they're taking advantage of.
Correct, yeah, because there's three tax codes that I think they're the three, I mean, I may be a little biased, but they're the three strongest tax codes in the U.S. tax codes. Is 72E, which is you can put your money inside of life insurance tax-free. 7702 says you can access your money tax-free. And Section 101A says that you can transfer your money to a beneficiary upon your passing tax-free.
That's it. And oftentimes people think that life insurance is just for dying. So I want to show here another article here. Let's see, where is it? Banks. Speaking of banks, okay? Bank-owned life insurance. Bank-owned. So in other words, the institution actually owns life insurance. It's called BOLI. Bank-owned life insurance continues to be a popular investment choice for a variety of banks as of December 31st, 2020. 3,137 banks nationwide reported not death benefit, but cash surrender values on their regulatory filings. 67.6% of banks nationwide with assets between 100 million and 1 billion currently own BOLI, bank-owned life insurance. So if you look at these banks, $210 billion in life insurance, cash value. What is some financial expert say on TV? Trash value? Well, the banks don't think so.
The banks don't think so.
Banks don't think it's trash value. So, listen, this is how a bank is looking to securitize and minimize their risk to pass on interest to their banking customers by ownership, not just in real estate, ownership in debt instruments that they're lending you, but also ownership in cash surrender values, bank-owned life insurance. By the way, any thoughts on BOLI?
It's very interesting. So BOLI is, I was actually speaking with a person who's a branch manager at a bank the other day.
Was it like a community bank, a regional bank?
I can't remember the name of the bank. It was community bank. They want her to be the regional manager, but she's just the district manager. I was asking, I said, why when I walk in is everybody senior vice presidents? And it's because they buy life insurance on all the employees of the bank. So that's what BOLI is. It's
bank-owned life insurance.
Bank-owned life insurance. And you see COLI, corporate-owned life insurance.
So corporations do it too as well.
Correct.
Just not banks. So why would they? So the question is, well, why? Why would they buy life insurance, permanent life insurance? This is not term insurance. This is permanent insurance, more specifically not whole life, more specifically universal life, or in some instances index universal life insurance. Let's take a look. Let's unpack a insurance company asset allocation. Okay, let's get insurance premiums. Let's go 2020 to 2021. Commission fee, net income, revenue. Okay, more importantly, I want you to take a look at this. Okay, this is where the asset allocation here is of this particular insurance company. This is not secret information. This is public information. One of the companies we do business with, National Life Group, this is their asset allocation. So where's the majority of the money?
Bonds.
Bonds, not risky investments.
Correct.
Not crypto, not stocks, not even real estate. Look, they have commercial real estate. And the commercial real estate is buildings that they own.
Yep.
Okay? Asset and mortgage-backed securities, private placements. Look at this, government securities, limited partners. Where do you see the risk? Where's the risk here? Where's the stocks? There might be a little bit of risk here if you consider mortgage-backed securities, but it depends on the asset class. Because here's another thing too as well. Here's the one thing to look at too is banks have what they call, where is it here? NAIC rated bonds. Okay, this is the assets. They have NAIC 1 through 6 rated bonds. 47% of this insurance company's holdings is in NAIC 1. Let's define that. The NAIC, let's go back there. Let's see here. Where was I? I think it was this one. Oh no, is that one? No, it just came off of it. Excuse me. The NAIC, through its Securities Valuation Office, has its own credit rating scale for the insurance industry, running from NAIC 1, low risk, to NAIC 6, highest risk. All securities and insurance portfolios use these designations as a related factors to assess solvency capital requirements. So basically, the more risky it is, it's more the higher asset class. The less risky, more predictable one. So 79% of their assets are in NAIC 1 and 2 assets. So what they're showing is, hey, your money is safe.
That's it. You see most banks are B plus rated. Life insurance companies are A plus rated. That's 3 to 4 more levels of security than your local bank. So when people ask me, do I leave all my money in the bank just sitting there getting less than desired interest?
Yeah.
Or do I put that money to work for me?
Yep.
I just point them, the number one rule of money is keep it in motion. Because if it's just sitting there, it's dying off. Yep. And you need your money to make as many babies as possible right now if the government's going to continue to print off trillions of dollars.
Before I wrap up this portion of our conversation, I I just want to remind everybody, the reason why people got worried about SVP Bank is because there was a run on the bank. A bunch of depositors, people had bank accounts there, started withdrawing. That's what the run means. They were running their money out. They're withdrawing the money from the bank, depleting the bank's assets, so therefore expose the bank to risk. In this case, regulators shutting down that bank. Now, the flip side is, if we're talking about, where's my money safe? We have a conversation we have all the time. And I'm not an investment advisor, but I have a rule of thumb. I call it the 4 homes of money. I want my money where it's liquid. I want my money where it's safe. I want my money where it's earning a higher rate of return, beating inflation. And number 4 is where it has tax advantages. So we're talking about, well, man, how safe is the life insurance industry? Well, how do you not have a run in the life insurance industry? So if there's a run in the bank, which means what? People are withdrawing money from the bank, so there's a drain of assets. How do you create a drain of assets to a life insurance company? People got to...
Mass murders.
People got to die.
You got to die.
Basically, a major war hits the West Coast, hits the East Coast, where all these people who had policy with insurance companies are now asking for a claim. So basically, a major catastrophe has to happen. War basically has to happen. And the people that go to war have to have insurance policy with that particular insurance company. And what potentially may have exposed the weakness of the life insurance industry in the last 3 or 4 years. What was it? What was that situation we just all went through with masks and vaccines and all this stuff, lockdowns and shutdowns, essential, non-essential? The pandemic, COVID. And COVID was an opportunity for the insurance industry to be stress test, to see people dying from COVID. Would they create a run on the life insurance companies? And guess what we found out? It didn't. Did people die? Yes. Did people die with life insurance policies enforced? Yes. But guess what's not created? A run on the life insurance industry. I've been doing this now for 24 years, being in the life insurance industry. And I can't tell you how confident I am and to see me go through the 01 dot-com bubble, the 07, 09 Great Recession, to see us go through the pandemic, the flash crash at the beginning of the pandemic, to go through now this recession that's not been called a recession, this high inflationary times. And so, Jesse, how has the life insurance industry treated 2 things? You, as an entrepreneur in the insurance industry, and 2, more importantly, your clients.
My clients can sleep in peace at night right now. I'll tell you that. I get messages all the time from my clients who, now they came to me out of fear, first and foremost, wanting to get educated, because I got into the industry 2018, and then we had 2020, the flash crash. March 13th, 22 days, market dropped 40%. They lost a couple 100,000.
Your family?
Yeah, some members of my family, but the majority are clients. And they come to me and they said, listen, I worked for 20, 30 years. I'm tired of losing my money. So now we're able to get them in, truly care about them and their financial livelihood for future generations and educate them. Mm-hmm. And now they're able to make an educated decision. So my clients are sleeping in peace tonight, knowing that their money is safe and protected. They can't outlive their money. But as the industry for my family, it's been game-changing for my family. We went from the physical battle of war to now fighting the poverty war. And the money that we make here is just a byproduct of the impact that we make in people's lives. So I tell people, the more impact we make, the more money we make. The more money, the better our life is, and the more we can actually do to our community. Because I can't help anybody. Getting out of the military, we were living paycheck to paycheck. And I couldn't help anybody. I was just trying to help myself and my family.
So, Jordan, can we share my screen here real quick? Because we took a picture this last Saturday recognizing you and multiple members of our office here in Dallas. We do this formation once a month of the highest income earners, because basically we feel that the more money you make is the more people you help.
Yes.
And so, Jesse, last month, that's you and your wife. She's a teacher, master's degree. You have a blended family, and you have 65 children.
Almost. We got 7.
Right? So you got a lot of kids, blended family, a lot of kids. You made $88,000 last month, man. You made $88,000 last month serving people and helping people with this particular topic. The crazy part is, during this crisis, during the downturn, during COVID, we can go back, Jordan, during this crisis, during COVID, during high inflation rates and interest rates, A lot of industries are reeling.
Yep.
They're peeling back. But brother, our industry and you in the industry is marching forward. So what's the difference that you're seeing here versus any other career endeavor or business you could potentially started leaving the military?
It's confidence in our ability in the actual product. I believe that the insurance industry hasn't grown in 50 years because we lack the agents in the industry to actually go spread financial awareness. Mm-hmm. And we've been relying on the education system for our financial guidance. And we know it doesn't exist.
Yeah.
So companies like ours, where we recruit, train, and develop new agents in the industry, we're able to get an army of licensed agents flooding the communities with financial knowledge, financial literacy, and we're able to grow the industry, which is giving more confidence to the I guess citizens, mm-hmm. which is also shedding light on the true power of life insurance, because it's not about death. It's called life insurance for the living, not the dying. We got death insurance. That's final expense and burial coverage.
So, Jordan, if you don't mind, can I go back to this picture? So the coolest thing about this is just not you finding success, but you got your buddy Mark Cassara there finding success. And what did Mark make last month? Mark made, and he and his wife made $41,000 last month in terms of compensation in the month. Right? And you got Laquan Butler over here, who just relocated from Jacksonville, Florida. Laquan here with the red tie, right? Over $12,000 of cash. He's a former finance manager at the dealership, spending 60, 70 hours a week at the dealership. Now he's got a life. Yep. And he relocated from Jacksonville to Dallas to work together with you.
Proximity is everything.
Proximity to everything.
And that's why we relocated from San Antonio to Dallas to work side by side with you.
100%.
So
it's been great to have you guys here.
The cool thing about that picture is knowing that it's duplicatable. It doesn't matter where you came from, what your background is. As long as you're willing to learn a new skill set, learning to be teachable and coachable, and actually put a little effort behind it, you can create, completely change your life. And we were talking last night, it's actually scientifically proven that it only takes one person to change an entire lineage.
Of course.
Transitional character. Go research what transitional character is.
Transitional character.
Transitional character.
We got to Google that in a second. Jesse, what's some of the misconceptions you had about entering the life insurance industry and being an insurance agent? Did you have any?
The only thing I knew about life insurance was the SGLI, Service Member Group Life Insurance. It paid me if I passed away. That's all I knew, $400,000.
Extra $15 a month every. That's it. That's all you knew.
$32, and it went up every time I would go up a rank. They'd add $10 to it. So I didn't know anything about life insurance. So I got started in the industry based on the opportunity to help other people, and then I figured I'd learn about everything else later.
So when you're sitting down with people, what's some of the misconceptions? Now you're educating families. You're educating families. You're educating people who are also veterans. What are their misconceptions too, misunderstandings and myths that you find yourself commonly addressing and educating them about?
You don't know what you don't know. And Will Rogers said it best. He says, it's not what you know that will kill you. It's what you think you know that just ain't so. And I knew, hey, when I get out of the military, I got an SGLI. I go to my TAPS class, the military transition. And they said, hey, you can transfer it over to VGLI. I'm like, okay, let's do it. You don't know any better.
Yeah.
So now that we're able to actually guide people, actually let them know, okay, that's cool, but here's some other alternatives. Get educated on all of them and see what best fits you and your family and your needs. So
what's some of the because you were a Army recruit at one point. You're very good Army
for 12 years.
A recruiter. So what's the difference between recruiting people for the Army, recruiting people for the military, versus them getting out and potentially them recruiting them into an industry that'll handsomely pay them as it's handsomely paid you?
Well, me getting out of the military, it came from a couple different things. Stack of bills piling up, having more month than we had money. You got 7 kids, they can eat a lot of food. And as they get older, they eat more. And I told my wife, I said, I'm really good at what I do in the military. I have the awards, I have the accolades, I have the master's degrees. Doesn't matter how much energy I bring.
So you got your master's degree while you're in the military.
Correct. I got 2 of them.
Nice.
Doesn't matter
What,
how.
master's in what?
Master's in management and an MBA.
Nice.
So that's probably why I'm so technical, right?
Good
So
job.
it didn't matter how much energy I brought to the military. It didn't matter how many hours I put in. I still got paid the same as the guy or gal who showed up late to work, who didn't have any college education.
Yeah.
And it was, to me, it was socialism. I said, no, every successful person I know, they're either a business owner or an entrepreneur. I got to get out of the military. So having 16 years in, people were, you're crazy, first sergeant, you're crazy for getting out.
Yeah, you have 4 more years to go to full retirement.
Correct. I would have retired this year.
No kidding.
I would have retired this
full
year.
pension.
Full pension. First
For the rest of
sergeant.
your life.
First sergeant. Well, because we were on the high 5, so 50%. First sergeant base pay is $5,100.
Okay.
Times 50%, I would have made $2,500 per month.
Extra part-time.
Extra.
But you still had to get a job.
That's it. I would have been working at the post office like everybody else. And I told my wife, I said, this isn't the life I want. But here was the determining factor. I looked at people with 20 years in, with 25 years in, with 30 years in. I said, is that the car I want to drive? Is that the house I want to live in? Is that the lifestyle I want? And it wasn't. So I said, if I stay any longer, I'm just going to get more of what they have.
Yeah.
And I challenge everybody out there right now that's working a job that may feel like they're overworked and underpaid.
Yep.
Like, look at the people around you. How long have they been working there? What type of car do they live in or drive? What type of house do they live in? Yep. And is that where you see yourself 5, 10, 15, 20 years from now? If not, you got to make some changes.
Let's say they want to make some changes. Now, and let's direct this question and answer to a veteran that's out there that wore a uniform or they're currently wearing a uniform about to get out. Why should they even consider getting involved in the insurance industry? After all, we've been conditioned to be a cop, we've been conditioned to be a firefighter, we're conditioned to be a contractor, we're conditioned to get a job equivalent to our MOS getting out. Why consider doing something that's risky, being in business for yourself in an industry you don't even know about? What's the benefit of me doing that?
You're finally going to get paid what you're worth. Remember, money exchanges hands when problems are solved. You're solving problems right now, but they're not your problems. And you're getting paid very little, and somebody else is getting paid a lot. Have confidence in yourself, your abilities. You spent 5, 10, 15, 20, 25, 30 years in the military. You show up you wake up at 5 o'clock every day. You go do morning PT. You something, shower and shave, and then go to work, right?
The shit.
Yeah, you shit, shower, shave, and then you go to work, and you get off, and then you spend time with your family, and it's like clockwork every single day. Now you're actually going to have a purpose, and it's about living that life of significance, and that's helping other people truly become the next best version of themselves. So on the other side of that fear that you have, because I know you've been used to following the plan, you're just a good worker bee. They give you marching orders, and you go and execute. Now imagine doing that for yourself. Working 20, 30, 40, 50 hours a week for yourself and building your own legacy. Because it's written in the Bible that our responsibility is to leave an inheritance to our children's children.
Yes.
And a 9-to-5 job wasn't going to allow me to do that. And I got a lot of kids, which means I'm going to have a lot of grandkids.
Yeah.
So I need to find something else.
The thing I respect most about you, and I think a lot of men and women enlist into the military because their upbringing wasn't perfect. They have a lot of challenges. They have a lot of maybe emotional trauma growing up. And instead of going to college or not having the financial wherewithal to do so to begin with, or the family support to go to college or have a life in a trade school afterwards, they end up enlisting into the military. I'm sure a lot of those conversations were had by you as an Army recruiter. Did you find that a lot with a lot of the soldiers you'd end up recruiting at maybe 18, 19, 20-year-old, that a lot of them had some broken homes and some trauma that they let's get out of here and let's get you in a uniform and serve our country instead?
Sure. So I was the #1 Army recruiter for 8 years in a row. Led the #1 Army recruiting company out of Fort Bragg, North Carolina, for 4 of those 8 years. But the way I would recruit was different than everybody else. I know that people naturally want to be led, and when they came to the recruiting center, I wasn't the guy, hey, what's up, what's up, what's up? No, if you sit in that seat, you're joining the Army today. If you have no intention to join the Army, go sit in any other seat. But if you sit in that seat, you're joining the United States Army. They would sit in that seat. They would get started. So what I would do is I would take out a white piece of paper. This was my recruiting interview. Mm-hmm. Take out a white, instead of flipping through the Army I Love Me book, all my certifications, trying to sell them a dream. I got a white sheet of paper. I would walk to the printer, get a white sheet of paper off. I went to Office Max, okay, and they had these colored pencils. One side was red, one side was green, right? So I drew a line down the middle, like a T-chart, right?
Yeah.
Drew a line down the middle. In red, I wrote your plan. In green, I wrote Army's plan.
Yeah.
How are you going to pay for college? Their plan. How are you going to pay for bills? How are you going to take your girlfriend out on a date? How are you going to do this?
At the end, when the date goes good.
So it's telling them their plan was crap without saying your plan's crap.
Yeah.
Because remember, red means stop, green means
go.
Go. So I would write Army's plan. How you going to pay for college? We got the Montgomery Job here, $32,000. We got student loan repayment program. Then I said, out of these two, what's your decision? If I had a piece of paper, are you ready to join the United States Army here today? They're like, yes. I take them up to the MEPS, pass the asphalt. That's how I did it.
Boom.
I was selling them.
That was that's a Ben Franklin close. That's what we call the Ben Franklin close, bro. You know, you're educating. Listen, we both know what your options are, what you want to do. Now what? The thing there too is what has that meant for you as a person that wore the uniform, to be an entrepreneur, to make the money that you're making, to provide the family the size that you have, to be a hero once again in the eyes of your wife. Not that you weren't ever before, but the fact that you're more of a provider. You've retired her. The last paycheck she's taking is not from another man or a woman, it's from her husband.
She don't have to ask anybody for permission to take a bathroom break anymore.
What is that intrinsic value? What does it mean that you're an entrepreneur? You're setting an example for your children, your wife, as a father? What has that meant to you?
For me, you know how marriage is for sanctification? A lot of people ask me, so what's your why? Why did you get started? My family's part of it, but it's more about, I believe that by me because we're all God's children, and I believe that by me taking the time to educate one of God's children on how money works and how money grows, because think about it, 80% of the stress a human being carries with them is financial stress. If I can sit kneecap, belly button to belly button, and educate you on how money works and how money grows, help you relieve 15, 20% of that stress, you're going to be a better man, better husband, better father, better mother, better friend, and that's how we change the world, through financial literacy. And I truly feel that, and then the money we make, like $88,000, I give all the glory and credit to Christ.
Amen.
There's somebody out there watching that says,
Amen.
if a soldior can do it, I know I can do it.
Definitely a soldier.
If a Marine can do it, I know I can do it, right? So, it's just a blessing to be able to make this. It's the law of reaping. So, that's right. The more you give out to people, the more you're going to get back. And Zig Ziglar said it best. He said that success happens when opportunity meets preparation. And if you want to become successful, all you have to do is help other people become successful. The more people you help succeed, the more success you're going to have. I say, so all I got to do is help other people? I can do that.
Yeah.
Right? So that's all it is.
And what an honorable way to make money. The way to help yourself is also by first helping others.
That's it.
So, hey, Jesse, before I let you go, brother, because I know we got a meeting tonight, where can more people find information about you and connect with you?
Yep. So they can find me at The Real Jesse Moon on Facebook, on Instagram, and
The Real Jesse Moon.
The Real Jesse Moon.
Jesse. Jesse.
Jesse, not IE. But there's a lot of fake accounts out there. And guys, be wary, because they're messaging us right now. Is this you? Is this you? Is this you?
Yeah, that's right.
And when you build that relationship with your followers, they know it's not you.
Yeah.
So, but The Real Jesse Moon on social media.
My guest here today, Jesse Moon, and shout out to his wife, Cindy Moon, out there. And children at home, appreciate you allowing Pops here to be on the Millionaire Goals podcast. That being said, if you haven't done so already, make sure you hit subscribe, you hit like, you drop your feedback, your comments, your questions in the comment section below. And make sure you share this with those that you love and care about if you feel that this would provide value to them. From Dallas, Texas, I'm your mighty smart guy, and until we meet again. See you tomorrow, noon, Central Standard Time. We'll unpack this even further. Until we meet again, continue to live smart, continue to love smart, and be mighty smart today. Thanks for joining us on this emergency podcast. Bye-bye.